Well, we are at the 5th day of Christmas. Isn't time flying when you're getting drunk? I mean, having fun. Let's raid the stocking, see what we come up with. On the 5th day of Christmas, we mate Mint said to me, we've got a tip. Is it going to be a hot tip? Right, do you know what? It's about time we had this tip number 2, indicators. And we've put reliance / simplicity. And we're going to talk you through both of those. Right. Indicators are basically RSI, stochastic, you know what, there's loads of them, moving averages and things like that people use. When it comes to indicators, I'll be honest, the only ones that all of our traders use are, now and then we might use Bollinger Bands. Other than that, we do not ever use indicators. Now, a lot of you probably think you don't use indicators because so many traders are saying, oh, stochastic's overbought, RSI is overbought, this is overbought. You know, when the stock market crashed and, you know, let's just pick one out, the Dow Jones started to recover. Do you realise how soon the indicators were saying that market was overbought and how much higher it actually went? So many traders rely on indicators. They look at formations. By the way, if you do use indicators, there is a rule. Formations always overpower indicators. So it's formations first, indicators second. We don't use indicators. They give so many false signals. It's unreal. Why do you think these companies spend so much money developing indicators for you to watch? Because the thing is, if you're watching indicators, especially on like hourly charts and half-hourly charts and things like that, they encourage you to make new decisions. You'll have some sort of idea what you're going to do. You might not have a trading plan, but you have some sort of idea what you're going to do, and then stochastic and RSI are overbought, and you think, oh no, it's overbought, the market's not going to go any higher, I need to start selling now. We trade the stock market. We are day traders, right? We trade gold, we trade the S&P 500, sometimes the FTSE. We never ever look at them stochastics and RSIs, and we still make profits. It just goes to show you, you don't need them indicators. A lot of the time you're confusing things. That is what they're there to do. They're there to basically, actually that's not a fair comment. What is a fair comment is a lot of the time what they do is they actually make you make new decisions. And they make you second guess yourself and make new decisions. That is what the brokers or the account holders want you to do, because if you make new decisions, you're going to make the wrong decisions. You're going to go with your emotions and you're not going to make the best decision. Simplicity is the best way to trade. You can say, you know, this indicator needs to be this way, it needs to be that way, Jupiter needs to be opposite Mars in order for me to buy that. Some people complicate things so much. Keep it simple. There is so many indicators, there's so much with formation sometimes, there's so many buy and sell lines and patterns, things can get complicated. Simplify it. Very good traders will teach you, if you get under the wing of a good trader, what a lot of the time they will say is simplicity is the best thing when it comes to trading. Keep it simple, don't overcomplicate it. And a lot of the time what these indicators are doing is they're overcomplicating things. We can say we do not use indicators and we still make a lot more profit than most people. So if you are over relying on indicators, maybe start dying that down a little bit, stop using so many and just see how your trading goes, because people rely on them and they don't need to do it. Rely on the formations, patterns, support lines, resistance lines. That's what you want to trade with.